Labor announces policy to buy 40% stake in private homes to tackle the housing crisis. So I think that this is a really interesting policy decision. There is still quite a lot of information that we don't know, but what we do know is this type of policy has been around for a little while. Whilst I lived in London, they did have this over there in the UK as well. And at a glance, I really like it. As an affordable, as a way to enter the property market, I think it's a great way to have a partner join you. The government's your partner in this instance. It means that you have the property, you get to live in the property, but you don't have the associated debt, which is great. Now, what they're saying here, some of the details, the scheme will be available for up to 10,000 households per year. There are different rules around it. 40% ownership for brand new homes, 30% for existing, and then there are price caps whether you live in Sydney or Melbourne and the other states. Now, there are also some income thresholds, and then there is also a threshold on how much of a deposit you need here. The home buyer would need to have a 2% deposit to qualify to get in. And you'd need to be able to qualify with the right lenders. So let's have a look at some of the math in here, because I think that that's what it comes down to at the end of the day. If you're in Sydney buying a $950,000 property, you can get in with a 2% deposit, which is just crazy. So you need about 20 grand to get in. I don't know yet if there are stamp duty concessions or the government comes in to help you there. But then from a debt point of view, if you've got a $950,000 property, you're going to own 60% of that, minus the deposit of $19K. So you'd have about a $550,000 debt on that property. And then the interest component of that at 0.4%, about $22,000 a year. You'd probably have to do P&I, and let's assume another 10K. So about $32,000 roughly per annum as a quick yardstick. I think that as a policy, it's good, it's creative. I like it because on one side, it allows people to get in and buy property. On the other side, it actually protects property values, and in some instances will actually put pressure on the market, and property values will probably increase, particularly under that that threshold of 950 in New South Wales and 850 in Melbourne. So largely, if the Labor government comes in and they implement this, I do think that this is going to put further pressure on demand, and it will be propping up housing prices under that 950, under that 850 price point. And I think it's a good policy to allow people to get in, to buy their own homes, to live in it, and to get in and finally have their piece of real estate. I mean, who cares if the government owns 40% of the property? At the end of the day, it's going to be your backyard, your balcony, your view, and it's going to be a roof over your kids' heads. So I think it's great for entrance into the market, and I also think it's good because it stimulates the property market, especially coming into a higher interest rate environment, and it takes a lot of that pressure and debt off the person that wants to buy that property. So pretty interesting policy decision. I like it. I think it's going to stimulate the market. So for all of you homeowners or for all of you investors looking at the property market, looking at affordability is going to be a really good part of the market for you to purchase in, because I think we will see those short-term price increases. The other thing that I think is going to be stimulating short-term price increases is the fact that interest rates are going up. I want to show you this here. This is some of the most recent CoreLogic data, the rolling quarterly home growth stratified. That's a really long title. Long story short is what they're saying here is in the property market, people like to say the whole of the property market, but there are actually lots of different segments and pockets within the market. And here it's talking about the upper, middle, and lower parts of the market. That's the different price bands. And you can see as there is more pressure on interest rates, and as we're starting to see a change in sentiment, the upper part of the market has started to drop. The middle part of the market is starting to drop. But the lower part of the market, the most affordable part of the market, has been resilient. We're still seeing price growth. So I think that as interest rates start to increase, you're going to see a push away. The demand is going to shift away from the higher prices to more affordable prices. And then when we see policy decisions like this coming in, there's going to be a further push on affordability. Anyways, happy investing. I'd love to hear your comments. Do you like this new policy decision? Don't you? What sort of impacts do you think it's going to have? Keen to have a discussion around this. Happy investing.